Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 5th of January 2022. Alright everyone, let's get into it. So, I've had a few people kind of like ask me today about what's going on with the Polygon POS chain, why gas prices are so high on there, and kind of like why their transactions are failing and things like that. So, I'm going to go over that in a sec, but Polynya had a great tweet thread about this today, where they basically started off the tweet thread by saying the Polygon POS and Solana situations are more interesting data points in the transaction quality trilemma discussion. By optimizing for low fees and censorship resistance, they suffer from spam and very low quality transactions. And then Polynya goes on to describe how we can kind of like rectify this or solve this with things like layer 3s and being able to kind of like filter out obviously low quality spam transactions and all that good stuff there. Now, what I wanted to kind of like talk about is the fact that I've brought this up before, right? Where I've said that these ultra low fee networks, whether they be kind of like side chains, alternative layer 1s or layer 2s or anything like that, they're always going to end up in the same spot where there could be legitimate spam transactions or there could be transactions that are happening on the network that are just very, very low value, don't make much sense, and borderline spam, but someone maybe coded up a smart contract in the kind of like incorrect way that's encouraging spam transactions and all that sort of stuff there. So I think when you look at it from that perspective, I agree with Polynya when they say here that fees should be basically from 1 cent to 10 cent range instead of the fees being kind of like basically free, because then you just get really like lots of spam, lots of kind of like bot activity. You open yourselves up to DDoS attack and all that sort of stuff like that there. So this is an open problem. I think, Polynya says that there are some clear solutions like recursive rollups or L3s, where L3s can have ultra low or even zero transaction fees, but use Web 2 style DDoS protection, filtering out the spam transactions. Now, this is what I believe kind of like Solana uses at their layer 1. They basically have like a QoS or quality of service system where they filter out kind of like transactions that they suspect are spam. I'm kind of on the fence about this. I think that it basically amounts to censorship, right? Because I mean, you're not going to get 100% hit rate. You're not going to be able to determine that all the spam that or all the transactions that you've dropped were actually spam and weren't legitimate transactions. So I think that there is an argument to be made there that kind of like amounts to censorship. But I think that the point here is that if it's being done at like a layer 2 or layer 3, you get a lot less censorship resistance guarantees the kind of like further up the stack you go, as opposed to something like layer 1. So you could imagine layer 1 as kind of like the most decentralized and censorship resistant layer, basically, near impossible for you to be censored on layer 1 Ethereum. Then go up to layer 2. Well, depending on the layer 2 that you're using, the sequencers can censor you. Right now, Arbitrum and Optimism both use a centralized sequencer. If Arbitrum, Optimism, the teams of Chain Labs or Optimism team wanted to censor you or censor your transactions, they could, and there's nothing to kind of stop them right now. Then you go to layer 3, it's the same kind of deal there. So I think that as long as people are kind of like aware of these trade-offs, it's fine. But this is kind of like one of the really, really hard problems that exist within kind of like scaling any kind of crypto network is that there's that trilemma, right? That Polynya has written about before, which is, I'll show the blog post here for the trilemma. You've got it here as a triangle. You have spam at the top of the triangle, censorship resistance on the left side, low fees on the right side, and you can really only have kind of like two. You know what I mean? Like you can have low fees and censorship resistance, but then it kind of leads to spam. You can have spam and censorship resistance, and then it kind of leads to low fees. I mean, it's a very, very hard problem, as I said, right? And you should give this blog post a read. It's not a newer one. I believe it's from October last year, but you can give this a read for kind of like more information about this. But I think that this kind of like relates back to the Polygon situation, because on the POS chain, obviously the fees are basically negligible most of the time, right? I mean, they're measured in Gwei, but that's measured against the Matic price, not the ETH price. So in dollar terms, it's basically, a few cents on the dollar sort of thing most of the time, probably even cheaper than that, depending on what the network's doing. But what happens on the POS chain recently is that some NFT project kind of spawned. I can't remember what it's called, but it got created and it got pretty popular. But it's basically, I think it's a borderline scam or Ponzi, but they coded it up in such a way where essentially everything's done on chain. So it basically encourages people to, because of the monetary incentives, to keep doing stuff on chain. which drives up the gas prices. And as I mentioned before, people are happy to pay the gas prices if it's worth it to them, right? That's why everyone is paying, well, not everyone, but that's why a lot of people are paying the fees on Ethereum L1 still, is because a lot of the people using Ethereum L1 are happy to pay the high fees because they're getting that value or more out of it. So the same is true for any network, guys. Like, a block space demand is literally unlimited. It doesn't matter which network it is. It doesn't matter if it's an alternative L1 or sidechain L2. There is always going to be a ceiling that gets hit, at least in the short to medium term. We hope that we can get to a point where we've scaled up so much that it becomes very, very hard to hit that ceiling. Just like in the Web 2 world, it becomes very, very hard, very, very difficult to, flood a kind of like server, because there's all those kind of techniques in it, with the quality of service techniques, load balancing, all that sort of stuff there. And we don't have that yet within crypto, besides kind of like fees. Fees are the load balancers of crypto networks. Like, there's a reason why the layer 1 fees on Ethereum are so high, is because the gas limit is low, right? The amount of transactions that can be processed by the network is low, but we get, from that, we get guarantees that the network's not going to go offline if it's hit with too much activity. It's just that the fees go up. So, but on these kind of like L2 networks, or these kind of like cheaper networks out there, they're offering lower fees, so they fill up, really, really, once they fill up, they basically revert back to what Ethereum L1 has, or they start to slow down, as we've seen with something like Solana, where they slow down to a crawl, or they go offline sometimes as well. So there are plenty of kind of like trade-offs here to be had. There is plenty of infrastructure still to be built. There's plenty of kind of like optimizations to be made on these L2 networks, and for now, that's just what we're going to have to kind of like deal with. And I don't know if I'm kind of like happy with basically filtering out kind of like spam transactions as a solution to this. Definitely not going to happen at layer 1, which is fine. Layer 2, maybe, I don't know. It depends how you can do it at layer 2. I don't think, I know it's possible at layer 2, but it's a lot harder. And I think I think it's something like a layer 3, it becomes a lot easier to do, but then you have way less of a guarantee that your transaction is going to go through, right? Your transaction may get caught in that spam, and you may kind of like have to retry it or something like that, which, I mean, it's okay if you have to retry it and you're not purposely being censored. It's kind of like you just get caught because they think, the network thinks you're a bot or something like that. But I don't know. I don't believe it's kind of like the ideal solution. But anyway, give this blog post a read from Polynya. Goes into a bit more depth about that there. So the Ultrasound Money account gave an update today of ETH's scarcity engines. So currently 8.9 million ETH is staked in ETH2, 9 million ETH is locked in DeFi, and 1.3 million ETH has been burned as part of EIP 1559. Now, this locked in DeFi metric, I don't think it's counting layer 2s, which I don't believe it's counting layer 2s actually, because the last time I checked DeFi Pulse, if I bring it up here actually, I'll bring up DeFi Pulse here. I don't believe DeFi Pulse is tracking L2s right now, and I think that's where they're getting the 9 million. Yeah, that's where they're getting it from. So if you were to kind of like count layer 2s in this kind of like metric here for locked in DeFi, I'm assuming that would be over 10 million at this point. Last time I kind of checked, because there's a lot of ETH locked on in kind of like Arbitrum and Optimism and a few other networks out there. So I'm sure that's higher there. But yeah, still really cool to see. I mean, almost 9 million ETH staked in ETH2. This is kind of like slowed down considerably. And I think it's going to basically remain that way until kind of like we get a clearer window around the merge. But even still, like, I think a lot of people are expecting that withdrawals are going to get enabled with the merge for some reason, when in reality, they're going to be 3 to 6 months out. I think Vitalik on a recent Bankless podcast said that they're more likely 6 months after the merge. So if the merge happens in June of this year, then we probably won't be expecting to see kind of like staking withdrawals until the end of 2022. So that's pretty crazy, right? And that means like for a 6-month period, we're literally going to have no net new issuance entering the market. So price could do some crazy things there. I mean, we not only have that triple halvening with the merge, but we also have that kind of like period where there's no new ETH kind of entering the market as well. So not only are we deflationary, we're like deflationary by a lot more than we would be. And then when the withdrawals are finally enabled, it's not like everyone can just unlock their ETH and sell it at once. That's not how it works, as I've mentioned before. How it works is that there's a kind of withdrawal delay, or there's like a maximum amount of ETH that can be withdrawn each day. Unless this changes, I think it's about 30,000 ETH a day or something like that. So definitely not a scenario where 1 million ETH can be withdrawn and just sold instantly. That's definitely not how it's going to play out. So anyway, I'm pretty curious to see how this plays out closer to the merge. Like, are we going to get to 10 million ETH stake before the merge? Are we going to see a spike once the merge happens? Because as I've mentioned before, the APY is going to go up for staking your ETH, because there's going to be the unburnt fee revenue and possibly MEV going to stakers as well, which is probably going to push I think like the APY up to 15 to 20% at current staked ETH amount and current fee revenue amount. So that's going to be pretty crazy. But yeah, we'll have to wait and see there. But great to see this kind of like scarcity engine update from the Ultrasound Money account here. So OpenSea announced their Series C fund raise today. So I think they've raised, oh, my internet seems to have gone offline again. Yep, I believe they raised something like $300 million at a, oh yeah, that's right, him right in front of me. They've raised $300 million, but I was thinking of the valuation at a, I think it was a $15 billion valuation or a $13 billion valuation or something, which is absolutely crazy, right? I mean, I think that is the biggest kind of like crypto valuation, especially for a Series C, that I've seen so far. And apparently there is really not going to be a token. I mean, I commented here when token, but from everyone that I've talked to and everything that I've heard, they're pretty confident that there's not going to be a token. OpenSea is basically just going to go public and IPO, and that's going to be basically all they do there. I think this is incredibly short-sighted. As I've discussed before, I think OpenSea is absolutely ripe for disruption. If they're not careful, they could become the pets.com of the NFT ecosystem. Look, I think that's a low chance of that happening, but I really do think that, as I mentioned, I think yesterday or the day before, about these grassroots communities around things, if OpenSea doesn't do a token, their community is going to be pissed, right? If that, it depends how much that counts for. I know a lot of people use OpenSea that aren't kind of like crypto people, right? They're just kind of like normal general people. And maybe they're not going to care. But I think that if they don't do a token, they basically open the floodgates to any other NFT platform that does do a token to essentially do a little bit of a vampire attack on them and get some volumes that way, because people would go there kind of like, because they'll use that instead because they hold the token or something like that. And you could even do like an airdrop of, you could literally just kind of like fork OpenSea, do an airdrop of the token to the same users, and then kind of get some traction that way. Because as I mentioned yesterday, OpenSea has 96% of the current kind of like market. I mean, nothing stays that high for long, like in terms of dominance. Like it's just not how it plays out. So I'm curious to see how that goes there. But still, this is an absolutely massive raise. We all know NFTs are crazy, right? Bigger than any of us thought they would get. And I think they're going to get even bigger this year, to be honest. I think that the funny thing is that there's still so much hate for NFTs. And I actually view the haters as potential customers later down the line, or potential users of NFTs, because the haters are not going to hate NFTs forever and ignore them forever. Eventually, it's going to get to a point where NFTs are going to become ingrained in, their everyday lives, or what they want to do in products and services that they use. And the people that boycott things are definitely in the minority. I don't think they're in the majority at all. And I do think that once Ethereum moves to proof of stake, it's going to be a lot easier to kind of like kill those arguments around energy use and all that sort of stuff. And then really, it just becomes the minority who just think that NFTs are outright scams. And to be honest, they're going to come around eventually as well. At least most of them will. Like people, I think when it comes to people, they can be stubborn, but only for a certain amount of time. I think eventually people come around, and there's obviously a small group that will basically forever remain stubborn and kind of like boycott NFTs for whatever reason, but they'll definitely be in the extreme minority there. So yeah, I think NFTs are going to get much bigger from here. I think the investors know that too. That's why they've given OpenSea $300 million at a $13 billion valuation, which is absolutely massive. So I guess congrats to them. I'm curious to see if they do kind of like when they do their IPO, and maybe they do a token. I would say it's not a 0% chance, but I would say it's an extremely low chance that they're going to do a token. But if they do, it's going to blindside everyone, because no one's really expecting them to do a token right now. And I think that would actually work really well as a nice surprise there. But don't hold your breath for it, that's for sure. So speaking of NFTs, Justin Taylor, who's the head of consumer product marketing at Twitter, gave an update today about their NFT integration. So he said, yes, we are still working on NFT profile verification. No, I don't have any timing updates I can share, but I'm currently testing it on my phone. So I remember covering this on the Refuel a few months ago, where basically you could have your NFT as your profile picture, and then you would have like a little ETH logo next to it to kind of say that, you actually own this NFT. It's tied to one of your kind of like known addresses, such as your ENS, such as Sassel.eth. So really cool to see that they're still working on this. Someone asked in the comments about like how they're going to do the verification. Apparently they're just pointing to OpenSea and using their verification. Now, my internet's not working. Whoops. Now, I think that's okay as like a short to medium term solution, but we need a better solution longer term. We can't just rely on a centralized service for verification. We need decentralized verification. And I think that's going to come in a big way. There's projects like Sysmo tackling that. in a privacy preserving way. Signing with Ethereum can tie into it as well. So that's going to come. But right now, I guess like really the most scalable way to do it, and the platform that has the most kind of like data about this is OpenSea. But yeah, cool to see that they're still working on this. And I can't wait to see when it goes live. So speaking of ENS, Brantly from the ENS team put out a great tweet today where he said, ENS is open source, has no gatekeepers, is self-running on-chain, specified with EIP standards, governed by a community DAO, had no special allocation to VCs, fully self-custodial with .eth names, forward compatible with legacy DNS, sends all protocol revenue to the DAO. Hashtag Web3. This is a true Web3 protocol. We always talk about Web3 versus Web2, decentralizing it, not having VCs involved, having it truly community owned. I believe ENS is one of the only protocols today that can actually call itself a true Web3 protocol for all the reasons that Brantly has outlined here. If other protocols want to get to this stage, they can. But it's kind of uphill battle. ENS didn't get here overnight. They took many years to get here, and they only recently did their token, which basically gave ownership over to the community. And they were in a unique position where they didn't actually need to raise money from VCs, whereas a lot of other teams aren't in this position, and that's fine. But there are ways to raise from kind of like VCs and angel investors and things like that, while still keeping it majority community owned. Like say you only sell 5 to 10% to these kind of like people just to bootstrap and to actually build the thing, and then you release the token out into the wild, and you could even do like a public token sale, which honestly, I think public token sales, maybe not the way ICOs were run, but just generally, are still an underexplored thing. I actually think that they should be used more often. I know that Balancer was doing some things with their LBP and stuff like that. I know that CoinList has a pretty popular service where they, obviously there's KYC and things like that. But if you're an angel investor or a seed investor, you get or a VC, you get KYC'd anyway. So it's not too dissimilar from that. And I think that that would be better than the current like status quo of giving a large chunk to these kind of like insider VCs and angels because you need the money. Whereas I think if token sales didn't get such a bad rap in 2017, we would be seeing more of them. But I do hope they come back in a big way. And obviously there's kind of like a regulatory issues with that as well. But I mean, that's going to be an issue for a very long time. So I think that it's kind of like do or die for a lot of Web3 apps. More of them are going to get launched anonymously, I believe. But I think they definitely need to follow the ENS playbook if they want to be a true Web3 protocol, because I can't really think of much else that is true Web3. I mean, Ethereum, obviously, but I mean, Ethereum is the protocol, is not a specific application, whereas ENS, I mean, the term protocol and application gets thrown around a lot, but I'm talking about kind of like a generalized kind of thing, whereas Ethereum is generalized, that has all these applications on them, whereas something like ENS is more of just like a an application kind of like standard here. So I'm just thinking in my head of any others that are like true Web3. Uniswap's pretty good, but again they had like VCs and stuff like that. Yeah, I mean, I can't think of any off the top of my head, but there's very few that look like ENS. But ENS to me is the gold standard for Web3 applications. So take note, app devs or future app devs or future builders, if you want to build something that's truly Web3, then ENS's playbook is the one to follow. So, Foks33 here, or ExaltedFoks is ExaltedFoks, well, not Forks, is their handle here on Twitter. Put together a thread on protocols building on Arbitrum, and these are the protocols that are native to Arbitrum versus the familiar multi-chain giants. So you've got here things like Umami Finance, which is a market maker and liquidity network, natively built on Arbitrum, of course. You have Dopex, which has been pretty popular. I've seen on crypto Twitter lately. A lot of the degens are really into Dopex. It's a pretty great platform from what I've heard. It's an options protocol on there. Then you have Noah. Not Noah of Markets. Noah of Markets will explain to you what Dopex is. You have GMX, which is on Arbitrum. I'm just going through the list here. Treasure NFT, which is apparently a really cool NFT platform on Arbitrum right now. I've heard a few people talk about that. Just scrolling down the list into Cap.finance here, Premier, 100 Finance, Tracer DAO, Lemma Finance, Vesta Finance, Primitive Finance. I mean, there's so many. I didn't realize how many there were that were native to Arbitrum here, so that's really cool to see. Sorry I can't load any of these things up, guys. My internet seems to have cut out. It's funny, all day it was working well. For the first day in like 3 weeks that I've been here, it was working really, really nicely. And today it decides to cut out. And the reason why it's cut out is because it's using my hotspot from my phone. I have to wait till Saturday to get actual home internet. But yeah, sorry I can't kind of like dive deeper into these. But of course, this thread will be linked in the YouTube description and you can dive deeper on your own. But I just wanted to kind of like talk a little bit about Arbitrum here for a sec. I don't know about you guys, but I've been looking at Arbitrum statistics lately or metrics lately, and they've been really, really good. They've been growing steadily. Arbitrum obviously doesn't have a token yet, but their ecosystem seems to be building itself out really nicely, and they have a bunch of projects on there that have a really nice community following them now, and all these projects are kind of listed here in this thread, but I love seeing this. Because I've mentioned before how I think that layer 2s will need to do tokens to incentivize usage to an extent, but at the same time, I believe that the longer they don't do a token and the more organic kind of like usage and growth that they get, the better it is for the longer term. Because tokens and liquidity mining is all well and good, but it's very short term, right? It's very mercenary. It doesn't really lend itself to long-term sustainability unless done right. And I actually think that if these layer 2 networks do tokens, which they will, I think that a lot of it should be reserved for the builders. You should just pay out the builders in these tokens as grants instead of just giving it to mercenary farmers who are just going to dump your token anyway. Obviously, you'd want to do an airdrop and things like that, but I really do think that at the end of the day, a platform is all about the applications that are on there, and as we've seen with basically all of the L2s, L1s, sidechains, whatever, the ones with the best applications, the best ecosystems that develop are the ones that get the most usage. I mean, the Polygon POS chain has basically all the star Ethereum apps on there, and obviously Uniswap V3 went live on there recently, and they're just continuing to grow. I mean, they're the only other chain with OpenSea live on there. OpenSea is only on Ethereum and the Polygon POS chain. So it really is about the builders, the applications, getting those kind of like ecosystems developed there. And I know Polygon had liquidity mining back earlier in 2021, and that's all well and good. It's just, it should be used to kind of like bootstrap a little bit of an ecosystem to an extent, but it shouldn't be used to kind of like pay out this perpetual reward to these farmers who really are just going to sell your token, and then they're kind of like liquidity locusts, and they just kind of like go somewhere else once the game's up. I think that's how it should be played, and I think that's how some of these L2s are playing it. But as I said, I do believe most of them are going to be having their tokens launched in the first half of 2022. Maybe not all of them, but most of them definitely, I believe. But anyway, go give this thread a read. It'll be linked in the YouTube description below. So Rainbow is teasing another integration here. Basically, in the Rainbow mobile wallet app, I can't load this, I can't make this image bigger because my internet's off here. But basically, in the Rainbow mobile wallet app, you can do the whole ENS kind of like flow. So you can register your ENS name, then kind of like edit a few of the fields here, and then have it set up with your profile, with your NFT showcasing and everything like that, straight in the Rainbow mobile wallet app. This is really cool. You guys know I've talked about Rainbow before. It's one of my favorite mobile wallet apps out there. I think these kind of like integrations, these kind of, I guess, really nice looking ones, the easy 1 to 2 click things, as I've mentioned plenty of times, this is what the normies want, right? This is what mass adoption is going to look like. It's not going to look like them using MetaMask and kind of like seeing all this weird stuff and editing the gas fees and all that sort of stuff. I'm sorry, but like that is not going to be what most people do, and it can't be, because most people don't want to sit there and kind of like and play around with it and mess around with it, even if they're given a monetary incentive to do so, because it's just not worth their time. They get frustrated. It's a headache for them. They don't have the time to do it a lot of the time, and that's why it took until things got very simple with the internet, and especially with smartphones, for it to really take off and to really reach mass adoption there. But yeah, really cool to see this new feature from Rainbow here. You can go check out the a closer look at the screenshot. It'll be linked in the YouTube description, and I hope to see more of these really cool integrations in the future from them. So finally here we have Joey from Fade Protocol talking about a new ERC called ERC 4626. Which Joe is calling a landmark interface for yield-bearing vaults that will supercharge DeFi innovation. On this rock, we will build our empire. TLDR, adopt ERC 4626 or not going to make it. Here's what this interface means for the tribe and for DeFi generally. So Joey gives a bit of a recap about yield-bearing tokens here. They'll come in all shapes, sizes, and implementations, but they have no cross-compatibility. With ERC 4626, it will standardize this paradigm of depositing and withdrawing from a vault denominated in a single token, which makes it incredibly easy for aggregators and plugins, which now only need to implement a single interface rather than dozens of adapters. So you can think of this as similar to like the ERC20 standard, where instead of everyone using their own token standard to kind of like issue a token, everyone just uses ERC20 or at least most people use ERC20 for a fungible token, not for a non-fungible token, obviously, and that's supported everywhere. It's just a very standard interface, and that's what ERCs are. They're basically standards. So with 4626, this would standardize basically yield-bearing tokens and depositing, withdrawing from vaults and all that sort of stuff, which means that everything would work much better, right? Everything would work in a much more composable way. There would not need to be adapters built. It would just make it much easier for these DeFi projects to all work together. So very, very, very cool here. I'm glad that Joey highlighted this. This is not something that I've thought about because I'm not a developer, I'm not a builder. Obviously, a lot of these things just get adapters built for them, but it would be a lot easier if devs didn't need to do that. And these adapters, from what I understand, also introduced more smart contract risk too. So obviously, anything that we can do to reduce that risk is a welcome change there. So go give this thread a read. I think Joey links to some GitHub repos as well, so you can dive deeper in there if you're a developer. And even if you're not a developer, I'm sure you can give this a read and learn something about it as well there. So yeah, I have 5 minutes left again on today's episode. I did want to talk about something else, but just quickly wanted to mention that it's still kind of like the first week of January, so it's been kind of like slower news days, I think. And that's why there hasn't been as many updates, but I'm sure it's going to be back to our regular scheduled programming next week. But for the last 5 minutes, I want to talk a little bit about the merge. Now, the merge, guys. I've said it plenty of times before that my own estimation, I expect the merge to happen in Q2 of this year. We've had the Kintsugi merge testnet or devnet, whatever you want to call it, that's still ongoing. I haven't had any updates yet about this, but I expect an update either later this week or next week on that from Danny Ryan or Tim Biker or kind of like one of the core dev organizers there. But what I wanted to talk about is people always say things like, or ask me, is the merge delayed, right? Like, is it delayed? Is it going to happen in Q2, or is it going to happen in Q3 or Q4, or is it going to happen in 2023? I want to make it clear that the merge can't be delayed because there's actually been no date given. My estimation of Q2 is literally my own. There is no, like, I'm not getting that from anywhere else. I'm just basically getting that from looking at what the currently available information, looking at how long it would actually take to implement these things based on previous comments from core developers, and then extrapolating a window from there. There's no date. There's no quote-unquote official window. The core devs haven't said anything. It's basically, I mean, the core devs have basically said when it's ready, we'll ship it, right? Which is the part of the course for Ethereum upgrades, or for basically most software upgrades, right? So if it does end up happening in Q3 or Q4 or even next year, which I doubt it, right? But I can see it if something goes wrong or something, you know, if the core developers don't feel comfortable about it, I can see it getting pushed to Q3, right? I can see it getting pushed to Q4. But I wouldn't consider that a delay. But where this kind of becomes a bit murky is that there is a general kind of narrative that develops over time where it doesn't matter if whatever I say, it doesn't matter whatever someone else says. What ends up happening is that people just believe that Q2 is the kind of like official window, and that is when everyone kind of expects the merge to happen. And if it doesn't happen, then everyone's going to be like super disappointed, and they're going to say there was a delay, and then everyone's going to get really upset. Those narratives just form on their own. There's not much that I or anyone can do about them. I think that they're bad and very poor narratives. They form based on poor information that a lot of people spread within the ecosystem. It's the same poor information. It's similar to the information about the merge leading to decreased gas fees, right? Like that is, oh man, I've said it before and I'll say it again. That is going to be the worst time to be in Ethereum when the merge happens and everyone asking, why aren't the fees lower, right? I thought, this is ETH2. I thought the fees were going to be lower. It's going to be so bad, but it'll just be something we have to deal with. But yeah, just generally when it comes to timelines, take them all with a grain of salt. Don't actually think that that's any kind of like official things. Even if it's coming from someone like me who's really plugged in, I just give estimations. And I said to you guys, I will literally update my estimation if the second that I believe that it's not going to happen in Q2 or it's not going to happen in something like June. But we're going to have to wait and see. I think we'll be able to kind of like get a better idea in the next couple of weeks once the update gets posted about the Kintsugi testnet, how that's going, how the developers feel about things, and kind of like what they think needs to still be done, and kind of like how much work needs to be done on both on the client side. Because I think the research is all pretty much done. It's more about the client side and the implementation side and testing it, making sure everything goes well. Because as you guys know, this is the biggest upgrade in Ethereum's history. It cannot be taken lightly there. But yeah, just a little bit of thoughts around the merge there. I will definitely keep you guys up to date on all of that. But I think that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.